The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, folks, we'll start the show with two markets that are really in hanging on by dear life. One has actually given up. That's the silver market, and then the gold is not too far behind. But I think we better cover that because we've been watching these support levels start to fail, and they're failing today. Gold hasn't quite failed yet. At least I don't think so. I'm watching silver right now. But we'll cover this at the beginning of the show, and then we will go into the stock market a little bit later. Frankly, ever since the market, blew up in my face on Monday, I said, well, you just stand aside because I don't know where it's going. It's just one of those things that's happened. I put up the IWM small cap showing it's at the 786, but frankly, it's probably going to go up a little bit higher. But we need to go into silver first, and I'll start out with the 60-minute chart on silver, and you can see that we've completed the big ABCD pattern. If you go into Tiger TV on the hourly chart that goes way back from November, early November, and then we have a situation now where we're down below the 786, and that's really a bad scenario for silver, because if we go below the 3060 level, that's going to take out the triple bottom that we've had that has been there for a long time. Well, actually, it's the double bottom coming back from, the November low, and this makes it a very, very suspect pattern because that tells us that we have probably are not going to, go higher on this run. That we're going to go, considerably lower before we go higher. So the price of silver is just not acting, the way that it should have, and so we'll just be really careful here because you don't want to be. In fact, you shouldn't be long silver below the 31, 48 level, in my opinion. Now, in the gold market, we're in a very similar situation because the gold. I'm going to put that up on a 60-minute basis also because we've had some really nice patterns form here over the last day or two, but the problem is that they're failing, and we still haven't gone below the big pattern that is just 1 second here. I'll put it in here. You'll see that we've had some really significant support coming in here at the 1659 level, which is the 1.618 retracement from the mid-December highs. And if that holds, we should be okay. So gold is holding, above the 1659 level, which is the longer-term ABCD pattern. Do you remember when we talked about last week that if it broke that 1685 level, that it would quickly go down to that 1660? And that's exactly what's happened so far. And so we're really dangerously close to, losing. The bullish momentum in gold. All it really needs to do now is to go below that 1655 level, and the next level below that is 1630, and then it starts getting into the 1500s, and below that it really starts to to move down. On a very longer term basis, it still looks okay, but it's really looking like it wants to go to about the 1620 level, where we would have a really long-term Gartley pattern forming. It comes in at actually 1630. That's where we get that 1630. Should we go below 1659 in the next day or two, because we still have 2 trading days left. There'll be very little trading on Christmas Eve, which is Monday. TFNN is closed, and frankly, most of the people are not doing very much on Christmas Eve. There'll be some people doing some taxing stuff, tax straddles and things, but not very much trading goes on Christmas Eve for sure. This brought up, I was speaking to Jim Twentyman, my good friend from trading buddy of 50 years or so, and when we worked at Drexel together, that was really a happy time of the year because we had the Hanukkah holidays, and then we had the Christmas holidays, and Drexel was primarily a Jewish firm, but their biggest holiday was Christmas. They really celebrated Christmas. I think it was partly because of all of the customers and then also the kids that were there, but we had wonderful parties. And at one particular party, Twentyman reminded me I'd forgotten all about it. It was a military, it was Christmas time where they were having a military wedding, and one of the guests was a guard at the Tomb of the Unknown Soldiers. And these guys are really the most physical fit of our soldiers, I believe. And one of the guys from Drexel upstairs in Milken's group was taunting the kid about he could do more push-ups than him, and the guy just wouldn't budge. He was just being very pleasant, and the Drexel guy was drinking a little too much. And finally, the guy said, okay, he says, I can do more push-ups than you. And he said, we'll bet $100 on each push-up. Of course, the guy at Drexel was loaded with money, and the young soldier didn't. And the young soldier said, okay, he says, look, we'll do as many push-ups as we can. The only stipulation is I'll do mine one-handed. And when the kid got to 110, the Drexel guy had already fallen off the wayside at about 35, and it was hilarious. It was really a fun time, and I couldn't remember that, but when Twentyman brought it up, it was really one of the fun things that we had happen at a party, because this kid, boy, he was really physically fit. If you ever have a chance to read about how physically fit these young men are, it's really quite amazing. Their specifications have to be within, I think it's 1/10% of physical fitness. I don't know exactly how it works, but boy, they are really physically fit. Anyway, one to the next. Now, we'll go to the stock market here. We talked about the gold market. It looks like we are headed towards the 1630 level. That'll be a good place to look to buy because that'll be an ABCD Gartley pattern. I don't know where silver is going to be at that time, but it most probably will be below $30 an ounce because it's already shattered the 61% 786 retracement, and it's looking worse and worse. Now the chart of Newmont is still looking okay. It's still holding up. That bottom that is down there, I'm not sure if it's going to hold or not. It hasn't bounced off of it around the $42 per share level. Also the XAU, the gold-silver index, is also holding right at the 61% retracement. So all of these could, very easily, give up the ghost, and we could start, something, really bearish. But right now, it looks like the gold is still holding that 1659 level, which was the overnight low, and we had a little bit of a bounce, and then we've held that level so far. But silver has given up those prices. Now that's not unusual because silver is, has 1/6 of the volatility in the volume that we have in the gold. So there's many, many more players in the gold market than there are in the silver market. And so it's easier to trade the gold than it is to silver by a large stretch of the imagination. Now, I would like to bring up and, show the XAU here because it is a pretty good component because it has a lot of the stocks that are in there. And it's holding the 61% level quite nicely so far. And as long as it can do that, it's trading right there right now at that 61.47 level. And that's right at the 61% retracement at 160.85. So both of those are still holding up relatively well. The XAU is, of course, the gold and silver index, which is the stocks, the mining stocks within that group. So that should hold. Now, the theory is, we've had a heck of a run in stocks here, and this might be the biggest breakout, since March of, 2000. I'm not sure. But when a market can explode out of here like this one did, you have to respect it because, the market that has been leading this market up has been the NASDAQ, and the market for the NASDAQ has not been, leading this market. It's been lagging it by a considerable amount. Now, I'm going to get into that before we get to the break because we really need to talk about the NASDAQ because it has so many of the technical stocks. But we are very, very close to the exact 61% retracement in the NASDAQ. We just completed an ABCD 2 days ago, and the 618 comes in at this level. The thing that I'm having a real difficulty with, folks, is that these lunar cycles and other cycles that I look at are just they're only working for like 2 days, and then they're just melting down. And the only time you have that is when a market is accelerating to a massive high, or it's breaking out, big time for a really long-term run. And there's a possibility that we could easily have a big long-term happy, Merry Christmas type rally that might last, well into the first of the year. Remember, we have the January effect coming up, which is for the first days of January. And the January effect has to do with the smaller caps. It means that the smaller caps gain on the larger caps during the first 10 days of January. That's the January effect. That gives a positive bias, to the market, during that time. So whether that occurs or not, we'll have to wait and see. Now, one of the stocks that, and we'll cover it after we go through the break, but that I watch very, very closely, and that is the price of Apple. And I've had several questions posed to me as to whether I believe that Apple has made a double bottom down here at this $500 a share level, and I will try to cover it on a technical basis when we after we get back from the break, because it'll take a little bit of time, to go through it, because there's some key levels that Apple is looking at, and if it can hold these levels, it certainly has a possibility of being a double bottom. And if it is a double bottom here, this is probably one of the better values that you're going to get if there's going to be a big leg up in the stock market. And I'm not so sure that we're going to have a big move up. We still have some negativity, but believe me, there's very little negativity here left. They blew this out the last 5 or 6 days. The divergences that were there in the transportation have disappeared. Even the utility index has started to move higher. And so all of these are telling you that there's some, serious buying has come in. Even though it's on very, very low volume, it's serious bottom. On an international markets, we've had that big bottom that we talked about in the Shanghai index a couple of weeks ago, and we had a massive rally off of that butterfly pattern that we talked about when it got down to 1959 in the Shanghai index, and it certainly, has gone above 2,100 now, so it's been moving very, very fast. And also the Hang Seng, and we have to take a little break here, pay a few bills, but Hang Seng has also made a long-term 786 relationship. 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to take a look at the price of Apple because several people have asked me if we have had a double bottom formation once we've taken out the $500 per share level. And believe me, it is way too early to make that assumption. Today we have not even taken out yesterday's high as of yet. But the way that I look at it, in order for a double bottom to form, the price of Apple is going to have to exceed the past 61% retracement, which would be up about the 564 per share level. Once it did that, that would break a small sloping downtrend line, and it would also give a higher probability that maybe that bottom at $500 was in fact a double bottom. But at this stage of the game, it is way too early to tell because we have this big ABCD pattern that is so perfect, with the C leg being 382 of the high from in September when it was $700, and it measures down to 394, which would be the low of the year where Apple started trading. And believe me, the shows that are when you go into the malls, I've only been into 2 malls because I haven't been feeling too well these past few weeks, but I've watched them on TV, and the Apple is by far the most popular store. I mean, they're packed in there like sardines, and they're using numbers, and so the sales are going incredibly well. Yet the stock is certainly not performing like the rest of the market, and even the Nasdaq that we put in the Tiger TV just a little while ago is lagging badly behind the rest of the market. But that doesn't that doesn't take away from what the market has done. Basil did a great job of, telling folks that, look, this thing has really started to moving, on the higher end, moving up quite a bit. And so it makes it, pretty hard to fade any markets here because they're breaking through these resistance levels just like they didn't exist. They last for like 1 or 2 days, and then they blast through, and that's a sign of a market that is very, very strong, and they can last a great deal of time. If you remember, those of you that were around during the 2000 era when we had the .com, those things went up for weeks and weeks at a time. And if you'll take a look at what's happened now, I'm going to put the New York Stock Exchange Index into the Tiger TV because that's my favorite, because that's the largest of all the indices. And as you can see, yesterday we gapped above the 786 level. We broke the lower trend lines that we've been having, and now, we're just faced with a double top up here, just a little bit higher. Whether that double top means anything or not, we have to wait and see because there's no other patterns, to look at. We have a pretty good cycle date coming in today, and then don't forget we have the end of the world is going to be on the 22nd, but I think that's going to be a little bit of a disappointment, much like Y2K was. But getting back to the strength of the market, it's just not in the New York Stock Exchange Index. We're seeing it in the Dow Jones Index, and we're also seeing it in the S&P Index. The S&P completed the third ABCD pattern today, up around the 1446 level on the daily. It hasn't gone into new high ground, but it's still far above the 786, which makes you wonder that it can go still a lot higher. The foreign stock markets are also looking okay. London and London, Paris, and Germany, they're all above the ground of old resistance. And the only one that's holding up on a percent basis is the Hang Seng, and that is still at the 786 of last year's high. It hasn't broken through that. That's at 22,600. So we'll see what happens with it. But this could be a sign of some really good things to come to the economy if it holds these levels, and we'll have to see if in fact it is going to do that. It's still too early to tell, and we are in a holiday environment with the stock market, which is not unusual because people do get a little jubilant and sometimes a little crazy during this time. But it still looks like it wants to go higher to me. And believe me, I was bearish, and boy, I was wrong. And so I'll just wait and see what happens with the second part of the December when we come back. After Christmas, we'll have an idea of what the beginning of the year looks like. But frankly, it doesn't look bearish right now. It's got all the things necessary, to make it look like it wants to go higher. Remember, one of the things that I really focused on.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, we're back, folks, and I want to get into the crude oil market. We had a report this morning, and, crude has started to move higher. We've cleared the 786 retracement at the 89.25 level, and we're up just about $2 a barrel. We're breaking, almost ready to break out up into this 91.70 level, which is going to be really key resistance. But we're having this really wide-ranging bar today with a lot of power, so it looks like we're on our way to the 91.71 level, basis the crude oil. Which, people always make the assumption that gold and crude oil run together, and frankly, they don't, folks. They have periods where they don't do anything but go the opposite of each other, and that's happening right now. But crude oil does appear like we're heading to 91.71 a barrel. If we can make $2 a barrel in a matter of a few hours today, we can certainly make another $2 in the next day or so, because that's the next target, 91.70. So that's the next level that you'd want to be looking at. There's a three-drive pattern there, and it is also a longer-term, Fibonacci resistance at the 786 level. So it looks like we are heading towards the 91.70 level, in the crude oil, and we'll cover more of that on the commodity show tomorrow, because we've had a lot of movement in the grain markets. They've been going back and forth, quite a bit recently. And, which is great, because we need that volatility, and it's unusual to have that kind of volatility around the Christmas weeks, but that's what's happening, and that's what makes it so fun. Okay, now we need to talk a little bit about the U.S. dollar. because we've had a situation where the dollar has started to break down. But before I want to get to that, we've been looking at the Japanese yen. That's been one of our favorite long-term trades. This Tom O'Brien became really bullish on this way back when it was in the 75 level, and now we're very, very close to reaching some really severe targets. We're almost there. Around 85 is what we're looking at. We're trading around 84.36 right now, but this market has exploded. We talked about it on last week's show. We went sideways during November, and then we broke out to the upside, and we covered that breakout because that was at 82.83, and now we're 150 pips higher than that, and we have another 70 pips to go to match up the two targets that we're looking for in the dollar yen. Now, remember, folks, the dollar yen at one time, going back 30 years ago, that was trading at around the 260 level. And right now we're at 84, so you can see it still has a long way to go, if this is starting to move. And as you know, there's been an election in Japan, and they're supposed to have changed everything, with the swill of the pen, just like we do here with our fiscal cliffs and everything else. All of our problems go away, just like they did in Greece. The problems just disappeared. They weren't there at all. So. This is why you want to keep an eye on what prices are doing, and don't listen to the politicians, because they have a tendency to, exaggerate on both ends in order to get their goals across. So, anyway, we're reaching major objectives here now in the on the shorter term basis for the Japanese yen versus the U.S. dollar at that 85 level. And we also have had a really, and we talked about this on the show many times over the past few days, about the dollar index on what it's doing. And it looks like, that once we broke that, 79.70 level, that, we're heading down. We could go as low as the 76 level in the, let me get this, I have to get the right thing here. We'll put the dollar index is breaking down below the 618 and 786 retracement levels that we formed during the August and October period. We alerted you that last week, and that was when the euro was ready to come out of the 130.60 level, and now we're 2 points higher than that in the euro, and that tells us that we are looking for the dollar index to come down, quite a bit lower. Whether it's going to come all the way down to the 75 level, the 76 level or not, remains to be seen. It's still too early to tell. But we do have an ABCD formation coming in at 70.60. Now that equates to the euro coming in at 133.40, and we're about 60 to 80 pips, 60 to 100 pips away in the euro to make that objective. Now, we made a pretty big objective today in the British pound up at that 163 level. That's the third time that the British pound has hit the that level on a long-term basis. I'll put that in there so you can get an idea that some of these currencies, that they go back and forth, quite a bit, and you'll see that it's made a triple top in the British pound up at the 163 level, and so far it's backed off a little bit. But all we did today is we went back and we took out that old high from September the 20th by just a penny or two. That was at 63.03, and the high today was 63. What was it? 163.07. So it took it out by 3 pips. So that means that we've had a triple top form at least so far. Now, whether that's going to continue or not, we don't know for sure, but that's what it looks like, right now. Now, we covered the Japanese yen. Now we need to take a look at the euro, because the euro is, 53% of the value of all these things that we're looking at. And we've also had a triple top, and we massacred that triple top, but we were expecting that because we were talking about the fact that we had the possibility of that ABCD pattern forming, and that's exactly what's being fulfilled now. Is we're right at this, we're very, very close to this ABCD pattern forming that broke out of the triple top, and that's what we focused on last Thursday show. And then Monday I was not on the air because I was under the weather with this flu bug that's been really bugging the heck out of me. But this tells us that the euro has got the possibility to come up to, it's been as high as 163.08, but we can very easily make a little bit higher, 163.30. But we're completing that ABCD pattern at that point. Now remember, folks, if you take a look at this euro chart and go back and think where we were in July when the end of the world was coming with Greece and all the rioting and everything, and that was supposed to be the end of the euro as we know it. And look what's happened. The euro turns around and it rallies, well over $13,000 a contract in the midst of, supposedly, really bearish news. So here again, you've got to be able to say, just because the news is bearish doesn't mean these things can't go where they don't want to go. This is what's happening in the stock market. We had some bearish things happen in the stock market, and yet, the things went straight up. And yet, then you take a look at Apple. You have one of the most bullish things that could ever happen with the iPhone and the iPad and everything else, and the billions of dollars coming in, and the free advertisement that was there when the stock was at $700 a share, and people standing in line, paying $100, just to have the right to go in and buy something, and then also paying double and triple for them on eBay, and yet then the stock, immediately drops over 30% from 700 to 500. So you have to help, yourself with the technical part of this. Because the news, when it comes out, it's awfully it's many times after the fact, and you don't have a chance to react unless you're a technician and say, you have to ask yourself the question, if prices are going up, there's more buyers, and if prices are going down, there's more sellers. And that's the question that I ask myself when I see the stock market going up each day, is where are these buyers coming from? They're certainly right, and I've certainly been wrong, and so I have to figure out, all right, well, what is going on here? And so I try to let the prices, tell me where I think, the easiest place to, stand in front of this. Now, the good part is I didn't stand in front of it very long because I knew right away, I said that this thing had to, do four things, and it did. It bottomed on the solar eclipse. It rallied into the lunar eclipse. It backed off a couple days, and then it kept on going. And when it kept on going, it negated what I thought that cycle was going to be. And so that's it. Anyway, we'll watch this. Now, we were watching, I don't want to get into the commodities too much, but someone asked me to bring up, the wheat, because we were watching wheat last week on the Thursday show because it was forming, a long-term, daily pattern that was there. And we've had some really nice moves in wheat in the last couple of days. I'm going to just put in the intraday market over the past week, because you'll be able to see that the market's had some tremendous moves, and they've all been right on the money as far as doing the ABCDs and stopping right exactly where they should have. We made well over 22 cents a bushel, which was $1,100. Mr. Z in the room, pointed that out at that buy that we had at the 802 level. We ran up to 822, and now we came all the way back to 805. So we're going to be testing that 802 level again for the third time. Now that's not unusual because it's on a longer-term daily chart. So we'll be watching that, very, very closely on the commodity hour tomorrow, because we have a lot of these grains are at really critical levels, much like we're having in the gold market and in the silver market, because these markets, they're based on inflationary things, and if they don't come to pass, we'll be looking at something that is going to be, rather sinister as far as prices. It's not going to be an inflationary scenario. It's going to be more of a deflationary scenario. Now, when we started the show, Basil was talking about the price of General Electric. And General Electric, 2 days ago, hit the exact 61% retracement off the October high. And, it's had a pretty wide-ranging bar down today, so it started down. And, GE is one of the larger, it used to be one of the larger stocks. It's certainly not anymore because of all the problems that it had during the fiasco that we've had. Oh, I wanted to mention one other thing. There's a news article that someone brought to my attention. I don't read the news, but a friend of mine in New York City brought out a news article about the fact that the banks now are going to be able to be exempt from if they do something wrong. In other words, if they I can't remember what the word is, but they're going to be exempt from any litigation if they make a mistake in their mortgages. So they want to get this market in the housing market moving forward. This is what got us in trouble before, folks, is that they weren't held responsible for mortgages that were not done correctly. And now if they're going to give them a pass and not being held responsible for this, I mean, this is just another disaster waiting to form. So I don't know what's going to happen with it. But these legislatures, if they're allowed to do stuff like this, we have nothing else to be responsible for but ourselves, because you have to have someone has to hold responsibility, for at least doing business the way that it should be doing. They did a horrible job with the mortgages. I could give you story after story from Arizona of people that we knew that. Indemnified. Yeah, they're not going to be in. Thank you very much, Diane in the room told me they're going to be indemnified. They won't have any recourse. I mean, no one can come after them in the courts, and that's the problem that they ran into before. Unfortunately, they did pay some of this stuff back, but it ruined so many people's lives along the way that's not even that people forget about that kind of stuff. I mean, but that's neither here nor there. So we want to watch that, because that's part of that Graham-Dodd thing that's going on, and I'm not sure, where they get these legislative things, but we have to get to the point sometime in our future, whether it's a fiscal cliff or whatever, that someone has to take a responsibility and say, yeah, I made a mistake. And believe me, our SEC and our CFTC is not doing a very good job. They've let people get by. And then when they do get someone, they give them a free pass by letting them roll over on somebody else, and that's just not the way that it should be. There has to be a change in some of this stuff down the road. Whether it's going to be in my lifetime or not, I'm not sure, but there will be some changes, down the road where insider trading and stuff. I mean, insider trading is really not very much compared to some of the other things that go on, but there has to be someone stand up and say, look, this is where the buck stops, and this is where we have to draw the line, and that's what we really need, is to have someone step in and do that. Whether it's going to be the current administration or not, remains to be seen, but that means something. We have to take a little break here. When we get back, I want to cover a little bit more about the potential, for a massive breakout in the stock market.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.